we are going to start from question 5. And later we do question 6. Then we have 7 plus 8. So it means that we have a lot to share. Last time we handled from question 1, to question 4. Okay. So for now, we are going to start from question 5. But all I want is that, colleagues, you don't cram these things. Try to appreciate the concept. Try to understand how these things are actually answered and how these things are applicable in our real life situation, especially if you're a manager or even accountant. One time you will need to apply this tool. However much it has its own limitation, it has its own demerits, but at least if you are in a company, sometimes you need to forecast some things. And along the way, you find that actually this tool can help you, especially if you are in a manufacturing company. This tool is the best tool. However much it has its own limitation, but it can give you the picture. It's a very interesting area. And in an exam, there is no way they can trick this area. So every time you find that there is a question about CVP analysis, just attempt that question. Only that it may require maybe some time, but it is a good question to do. It is a good question to do. So I told you to prepare a break-even chart for the first quarter ending 31st March 2020, and we show this company's margin of safety on the graph. Part B, they are telling us that we advise this company's accountant on the best approaches for setting realistic and achievable financial performance targets. So if you know part B, when you're in an exam and you realize that actually you know part B, always start with that part, okay? Always start with that part before you do calculation number. We are going to analyze our case study. But before we analyze our case study, when you look at this part A of the question, as the person who is going to analyze your case study, what are you interested in? Because it's not just a matter of analyzing the case study, you must be knowing which information are you interested in. And colleagues, as we prepare the break-even chart, we have some information that we normally need. This is question 5. Question 5. And our focus is to prepare a break-even chart, break-even chart. So when you're preparing this, what do you need? Colleagues, we need to look at the actuals. You need to look at the actuals, then also look at the budgeted. You need the coordinates for actual information and for the budgeted information. You need the coordinates as you're going to come up with this chart, because you want to present this chart on your graph paper. So it means that you need the coordinates to plot. So for actual coordinates, which information are you interested in? Then also for budgeted, which information are you interested in? We are interested in units, total units. That is number one. Total budgeted units. Total budgeted units may be it can be also products depending on how they have phrased the question. Do you need total costs? Total budgeted costs. Total budgeted costs, that is total variable costs. Total variable costs. Then you add total fixed costs. Total fixed costs. Total fixed costs. Then you will need total revenue. Same applies this side. You need for actuals now, what the information you're interested on actuals is number one, break-even point in units. That is number one. Then number two, what you also need are total costs. But this total, as you get total costs, you're basing on the break-even point in units. Here, to get total revenue or total costs, total budgeted costs or total revenue, you're basing on the budgeted units. Okay? So you will need that information. As you interpret, this is based on budgeted, rather break-even point in units. Also, this total revenue is based on a break-even point in units. So as you interpret the question, this is what you need. This is what you actually need to make your break-even, to make your break-even chart. So it means that you are the person interpreting the question. You just need to analyze the case study while trying to get this information. Without this information, you cannot make a break-even chart. Okay, so we can now analyze our case study. This is MFCL, that is Mugurusi Furniture Company Limited, located in Buyukwe Industrial Park, has showrooms in Kampala, Jinja, Gulu, Mbarara, and Fort Portrait. And Fort Portrait. Okay, they produce domestic furniture, including sofa sets, dining sets, standard size beds, and king size beds using aluminum material. So you know now the products they are producing, or what they are dealing in. They produce how many products? You have 1, 2, 3, then also 4. This company has cash flow challenges, which the managing director attributes to decline in turnover due to stiff competition from both importers and local producers of furniture across the country. The MD cited failure to achieve last quarter's profit target. Okay, this is just information, no figures yet. So if you're reading for the first time, you see that actually the first paragraph has helped you to know the products. You don't need to go back to this first paragraph. Even you don't need to read again this paragraph. Okay, we go to the next paragraph. The accountant, on the other hand, has decided to carry out a CVP analysis, that is cost volume profit analysis, to establish whether this company is operating either below or above the capacity. So it is one of the advantage for you as a person to use CVP, you will find that actually you're trying to see whether you are operating below the capacity or not. Okay? This accountant is certain that the results from CVP analysis will be of great help in setting realistic and achievable profit targets. Okay? The company's quarterly fixed costs and target profit after tax are shillings, this amount of money in millions, and shillings 136.85 million respectively. This is based on quarter. The first figure is for fixed costs, then the next figure is for profit after tax. Every time you're given profit after tax, that one must be adjusted. In CVP analysis, we actually rely on the profit before tax. We normally rely on the profit before tax. If you're given profit after tax, you adjust to get profit before tax. Okay? And you're given the tax rate. This company sells sofa set, okay, with a sales mix. You're given a sales mix here. And this is the information you have. And when you're analyzing this table, ask yourself, are amounts given in 1,000 or not? If you forget that, you may get problems later. You see that our figures are in what? Are in 1,000. And this is based on per piece. This is based on per piece. Also, this is based on per piece. And every time you're given a contribution, life is now easier. Because sometimes you're not given a contribution. And in such scenario where you're not given a contribution, you get the unit selling price, you subtract unit variable cost to get contribution per unit. So this is the only information we need to answer our question, and we can start. So you observe that we are given a total quarterly total fixed costs, and that is how much? That is 11 shillings, 112.3 million. Let me just write the whole figure. That is the figure for total fixed costs. Then we are given profit after tax as how much? As 136.85. That is our profit after tax. Remember the tax rate. Tax rate is, we are given tax rate at 30%. Then we are given sales mix. We are given sales mix as 3 to 4 to what? 3 to 2. Check, confirm. 3 to 4 to 3 to 2. Then fixed costs, this one. Then profit after tax till this one. Okay. Then we are given this information. We are given this information. If you have contribution, start from contribution. Start from contribution. You don't need it to again draft this everything. No. So we are going to make our table. Then we put remember, as you work, what are you interested in, colleagues? Now, my my interest is to get break-even point in units, the total from all products. Because remember, on break-even chart, we don't put every product. We just put the overall figure. We don't put the break-even point for each product. We just get the total break-even point in units for all products. We also put total revenue. So I can first focus on this. Or another person can first get all of this. But let's first focus on this. But recall some workings. Recall as you get break-even point in units. We have different methods, colleagues, you can use, and all methods give you the final answer. Someone can decide to start with, can say that my break-even point, this is the total break-even point in units. Now I want to get total break-even point in pieces. The firm's break-even point. The firm's break-even point in pieces will be equal to what? You get, you add the profit after tax. Then this profit after tax, we adjust it. By doing what? We get 1 minus what? 1 minus t. Then everything you get divided by, if you have sales mix, you can divide it by total weighted average contribution per piece. As I said, we have different ways. Or another person can say it is the total fixed costs. Then I add my profit after tax. Then I adjust this by getting 1 minus tax rate. Then down I divide by, total contribution per batch. Colleagues, in an exam, just use the method you're familiar with. It doesn't matter which method you have used. What matters is the final answer. Do you all have the final answer? Because someone who is marking you, actually also those people know that these things we apply different methods. And students are actually taught by different people sometimes. Or maybe you refer to different textbooks. So you'll find that actually we have a lot of formulas for this area, but at the end of it all, these formulas can give you the right answer. Someone who have used this down and someone who has used this down, at the end of it all, you're going to have the same answer. But here, the person who have used this second formula, what you're getting is firms. What you're getting is firms break-even point in the batches. So that at the end of it all, you convert from batches to pieces. But someone who has used this already, his or her answer will be in pieces. But here, someone who has used this will have to convert from batches to pieces. But at the end of it all, you will have the same total break-even point in pieces. So this is the formula you need to get break-even point in pieces. You have total fixed cost, you have PAT, you have tax rate. What we don't have is this one, total weighted average contribution per piece. That's what we are trying to find out. And how do you get a total? How do you get total weighted average contribution per piece? Weighted average contribution per piece. You get your contribution, your unit contribution or contribution per unit. Then you multiply by sales mix. And this sales mix, we are multiplying, we will need to adjust it. It's recommended to use here in decimal points. Decimal points. Or in percentage. Then someone who have used this formula, you will need to get total contribution per batch, contribution per batch will be equal to unit contribution. Then you just multiply by sales mix, the way it is given in the question, without converting it in decimal points. This is in the batches. The sales mix, we call these ones batches. These ones. Yes. Okay. So we have our unit contribution. It means that the next step is to put here sales mix. And I want to use this method so that I can immediately get my answers in pieces. But we are going to use the same formulas too, because realized people are being confused with batches and converting it. So we need to convert. These are our batches, sales mix in batches. So how can you convert these ones into decimal points or in percentages? You just get, if you want for sofa set, you get 3 over what is the total? This plus this plus this plus this. What do you get? That is 12, isn't it? So you can maintain 2 decimal points or 3 decimal points. That's what you have, colleagues. Then here it is 4 divided by 12. I get this, but I can put this answer in I can use 3 decimal points. So then here it is what? I get 3 divided by the total, which is 12. Then here it is 2 divided by 12. And I put my answer, I can put my answer in 3 decimal points. Then here the answer you have is in decimal points. Okay, then from there I can get my work weighted average contribution per piece. Here it is not per batch, I'm putting per piece. So it will be equal to what? We said it is unit contribution times the sales mix, our formula here. Unit contribution times sales mix in decimal points. So I get this figure, I multiply by this one. Then also here, I get this figure, I multiply by this one. You do the same for all. You get this unit contribution, you multiply by this. Okay? Then finally, I need the total. I can put here another column for total. I need the total. Remember, the formula is total weighted average contribution per piece. So how do you get total? You add everything here. You add from here up to here. And your figures are in what? Are in 1,000. That is someone who have used this formula. Okay. Any question? Are we okay at this point? I'm using both formulas for the start, but other questions I will stick on one. You will choose the one which is easier for you. Here we leave our sales mix in batches. In batches. Then what we get here is contribution per batch. So the batch for sofa set, it was this is 3, this is 4, this is 3, then the last one is 2. Then you get this one times this one. You do the same for all. Then you get here the total contribution per batch. Get the total. Okay. So we are done with this. The next step now is to get farm's break-even point basing on our formula. The next step is to get farm's break-even point in units. This is like your next page. Let me hope you are doing this on your next page. We need to get farm's break-even point in pieces by just following our formula. This is our formula, we substitute. So how much is total fixed costs? It is 112 million 300,000. Then you add, what is your part? Profit after tax. Profit after tax is this figure. So we are adding 136,850, but we divide this by 0.7. That is 1 minus t. We divide it by 0.7 because 30% is 0.3. Then you get 1 minus 3. 1 minus 0.3. You get 0.7. Then the answer you get, divide it by what is our total work per piece. Our total work per piece is this one. But remember, this figure is in what? Is in 1,000. So you write 641 250. If we get this figure and we multiply by 1,000, I believe we get this figure. So on your calculator, what do you get? I'm waiting for you. With some speed. The reason why I'm saying you do, people fail just because of using the what? Calculator. Please do. Don't wait for me to write the answer. Do. Do. Are you done?
I've got 480.
You have 4. Remember, they are in a piece. Here we are getting figures in pieces, so you can round off to the whole number. These are products. You have 480. I'm waiting for another one to confirm. Colleagues, do you have this, all of you? Perfect. So someone who have used this formula, the formula is a farm's break-even point in batches is equal to this. So we get everything here. Then we divide by total contribution per batch. Total contribution per batch, which is this one. And this figure is in a what? Is in 1,000. So it is 7,695,000. And what do you get? Remember, the answer you're getting is farms. Here you're getting farms break-even point in batches, not in pieces. So what do you get? Someone is saying I have 40. What about others?
40.
Okay. So we put here 40. These are what? These are batches. If you want to convert from batches to units, to pieces, what you're going to do now is to look at each product separately. You now look at each product separately. Here you have, for this one, the batch for sofa set is 3, isn't it? So you get 3 times 3 times 40. Here you get 4 times 40. Then here you get 3 times 40. Then here you get 2 times 40. Here we are getting this 3. We multiply by 40. Then here we are getting this 4 times 40. Then here we are getting this 3 times 40. Then here we are getting 2 times 40. So that these are pieces. These are pieces. What you're getting now is in your pieces. So what is total? The total should give you the pieces we have. Do you get, if you add, do you get 480? Because this is what we have this side in pieces. If you sum up all this. Okay. So you see, someone who have used this still at the end of it, or you will have the same answer. Which one is easier? Which one is easier? The first or the second?
The first.
So, but I prefer the first. The first one helps you a lot. Even it helps you when you are converting your things, because here you will be having already your sales mix in the decimal points, and it can be easy to convert this to other things like as we are going to see in other questions. So the choice is yours. The choice is yours, whether you're going to use method 2 or method 1. The choice is yours. Remember, on your graph, you're looking for break-even point in units. That is break-even point in pieces, not in batches. So if you have used the second method, you have to convert. Okay. So we are done with this one. We are done with the first one. The next is to get break-even point. Break-even point in the sales. Oh, we want to get total revenue. Because what you're getting as break-even point in the sales will be for each product. Will be for each product. But at the end of it all, colleagues, you need break-even point. You need break-even. You need total revenue on your graph only. So what we are going to do, I can let me copy this. Even point in pieces, And how are you going to get break-even point in pieces? You just get sales mix times this. Sales mix times this. Sales mix, which sales mix? This one. this one. So you get, here it was, what is sales mix for sofa set? This one I multiply by this one. Then here I get the sales mix for dining set. It is this one. Then here I get the sales mix, which is this one. I multiply by this one. Then I get times this. So are you seeing that actually you have the same answer, colleagues? Are you seeing that you have the same answer like this? Here. So it means once you get this, you're going to, because we want break-even point in shillings, or the revenue, in bracket revenue. How do you get this? Break-even point in shillings, you get just break-even point in units times unit selling price. Break-even point in units times unit selling price. And do we have unit selling price for each? We can first put on the first column, we can first put unit selling price. Are we given unit selling price in the question? Are we given unit selling price in the question, colleagues?
Yes, we have it.
What is for sofa set? Let me see.
1,400.
These are our unit selling price. These are our unit selling price. So we just, and these figures are in what? Are in 1,000. So this is, you tell me, the first one is
1,400.
1,400. I can add 1,000. Then next,
1,600.
1,600. I add 3 zeros. Then next,
1,200.
1,200. Next,
1,800.
1,800. Perfect. Then we get break-even point in shillings. That is our revenue. Our revenue. So how do you get this? You get break-even point in units, then you multiply by unit selling price. You do the same. You do the same for others. Me, when I use my workbook, I get that. Then what we need is total. Remember on our chart, we just need the total revenue. So I will get the total. I will get the total by adding. You just add. And that is my figure. So if you have used the other method, you do the same. If you have used the other method, you do the same. You do the same. So if you have used this method, you just add here unit selling price, then you get break-even point in shillings. At this point, any question? At this point, do you have any question? So that is our break-even point in shillings, and we have our total revenue. So the next part is to get total costs. But these costs we are basing on what? On break-even point in units. So how do you get total costs? So the next formula, the next part, or the next working, we are done with total revenue. The next part is to get total costs. And how do you get total costs? So we said you get total fixed costs, then you add total variable costs. You have total fixed costs, but you don't have total variable costs. How do you get total variable costs? You can also decide to use the table if you want. You can decide to use the table also, pick the information, and use the table to get total variable costs. By just, or you can just use here, use this side to get whichever, as long as you get variable cost. What we need, what is unit variable cost? We need the break-even point in units. Remember, we are basing on break-even point in units to get total variable costs. That's why I'm putting here break-even point in units. Then I put here unit variable costs. MDC, all these things, this subject doesn't actually have the specific presentation of your answers. It is not like accounting that you have to follow a specific standard and what in the presentation. Here, any student can use different presentation. And at the end of it all, you have the same answers. Total variable costs. So what is my break-even point in units? These are my break-even point in units. I just put them here. Oh, sorry. Oh, I'm too fast. Am I too fast, colleagues? Or too slow? What is our unit variable cost? Go to the question and check. Your unit variable cost per piece is this one. So we copy that. Someone tell me what is the figure here?
875.
875,000. Then here
880.
880. Then I add 3 zeros because those figures are given in 1,000. Then next. The next one is what? The next is 630. Then okay. 630,000. Then the last one.
1035.
1035. Then we get total variable costs by just multiplying. We get this times this. You see, the number is not hard, but time, right? You need it to be very, very fast. So what is your total? You total answer, total fixed costs, it's this one. So we can now get total costs, which will be equal to fixed costs. How much? We have our fixed costs here. 1123. Then I add 404, 200,000. Then the answer will be, I get just do this. And I add this. Do you have this, colleagues? As your total fixed costs, total costs, so. So points, coordinates, the coordinates you have. Coordinates you will need to plot. You have break-even point in pieces. You have total revenue. You have total revenue. Then you have total costs. Here it is 480. Then here total revenue is what? It is this one. Then total cost is this one. So that is number one. That is number one. You're done with the first section. You're done with the first section, this one. So we need also this. We need this. But we can just use the table, automatic table, to get this. So the next working is to look at budgeted level. At budgeted level, what will be your coordinates? I can copy this. I copy this. Because we can do everything at once. Then here we need the total costs. First of all, we need the units. We need the units, the budgeted units. Budgeted units. Budgeted units. Those ones in the question. Then we need the we need the unit selling price. Already we have, okay, I can just put here total costs. Then here I put total revenue. Here I put variable costs. Let's start with variable costs. Variable costs, so about that. We can design this table and we fill it. In the question, what are our budgeted units?
We have 150.
These are our budgeted units. The first one is 150. 150. The next for dining set.
200.
Next.
175.
175. The next.
100.
Perfect. So we can get directly variable cost by getting budgeted units times unit variable cost. I get this. We have somewhere our unit variable cost, this one. Then I also get you just get only this figure here. This figure times this. Then we get this times unit variable cost for dining sets. Then we also get this times unit variable cost for standard size beds. Then we also get for king size beds 100 times the unit variable cost, which is this one. And I can get here my totals by summing up. My total variable cost. Then we also get revenue, and we are getting this budgeted units, then times unit selling price. Somewhere we had unit selling price. It is here, unit selling price. Then we get also this. You see here we are basing on budgeted units, not break-even point in units. We are basing on budgeted units. We multiply by unit selling price. This time was unit selling price. Okay. Then this times unit selling price. Then we get this times unit selling price. Unit selling price. And we are done. What is the total? I sum up all these figures. And that is my total. Don't know whether you have the same total. But this is my total revenue. So coordinates, here the total. You can also get here the total. for budgeted units, the total. Because on graph, we put only the totals. These are total. So coordinates here. Coordinates. Coordinates. Total units or quantity. Total units. Total units are just these ones. Then here, total revenue. Total revenue. It is just this one. Then total costs. Remember, total costs, you get total variable cost plus total fixed costs. So it will be total variable cost, which is this one. Then add total fixed costs, which is this one. And that will be all for you to plot. Any question at this point? You see the number is easier, but time, so you need it to be very, very, very fast. Very, very fast. In terms of using your calculator and also the way you write. So we needed to plot. Now we need to plot. I don't know whether you have the graph book, but to guide you just for purposes of learning. Okay. Now you need to know, as you plot, you need to know the scale you're going to use. The scale you're going to use, look at your values for total revenue. Look at your values for total revenue. Because you need to put here on vertical axis. Remember, on vertical axis, we put total revenue, total cost, total profit on vertical axis. That's what you label. Cost and what? Revenue. Then, because figures are too much, our figures are too much, when you read, we can maintain our figures in millions. That's what you're seeing here. Maintaining our figures in what? In millions. Maintaining your figure in what? In millions. So here you have cost stroke revenue. So it means that you get a suitable scale to make sure that all your total revenue can fit. Then also on the horizontal axis, what you're putting is your output, sales output, and it is in terms of pieces. Sales out, the output in terms of what? Pieces. Also, you need to get the suitable scale basing on the what? Basing on the values you have. What do you do first? Once you come up with a scale and drawing vertical axis and horizontal axis, the first thing you need to do is to first deal with the budgeted things. First deal with the budgeted coordinates. First deal with the budgeted coordinates. These are our budgeted coordinates. Okay? You need to first know the standing point, your units. Then you put a vertical line on where you have 625. That's what you see here. This is 600, and based on my scale, I assume that 625 is around here. You see this vertical line. you should start with this vertical line, okay, on your graph. Once you're done with this vertical line, go and handle fixed costs. Remember, fixed costs are what? Your fixed costs. Your fixed costs are just these ones. So it is, you are looking for this one on the vertical axis. If your figures are in millions, you are just looking for 112.3 on your graph, which is approximately 112 on your graph, on the vertical axis. So you see I have 100. I am looking for approximately 112. It is around here. You see, I put here my horizontal line to represent fixed costs. Once you're done with this, go and handle the total revenue based on your budgeted information. What is total revenue? The total revenue is this one, which is approximately 920, because you're putting your figures in a million. So on your vertical axis, you're looking for just 920. And you put a dot. You are standing where? You're as you plot total costs and total revenue. Where are you standing? You're standing on this point on horizontal axis. You're standing on 620, then look for 920. Plot total revenue. You're standing here. Then on this, look for where you have 920. Look for where you have 920. It is around here. Are you seeing that, colleagues? Because this is 900, this is 800, 900. So I have approximately my 920 is around here. So that's why you see I have arc. And it is representing what? Total revenue. So put arc here. Once you put arc there, the next is to look at now, is to look at your actuals. Your actuals are here. The information related to break-even point. These are your coordinates. What do you need? You need to stand. You need to stand on this 900, rather 480. Then look for where you have 712 on the vertical axis. Stand here on the horizontal axis. Then look for 712 on the vertical axis. We are standing on 480. 480. That's where we are standing. What is our 480? It is approximately around here. It is approximately around here. 480. Then move, look for 700 what? 712, which is around here. This is 700, then 712 is approximately here. Is approximately here. Once you're done, join. Start from here, then join your points. These 2 points, make sure that they are meeting each other. From the starting point, you join. The line must be very straight. From here, join. Then you do the same for the total costs. For total costs, you need to first stand here, then look for 633 on vertical axis. You're standing here on 600 Is it 600? Where are we standing? 625. Then we are looking for 633. So we are standing here, 625. Then we look for 633 on the vertical axis. You see here there is arc. Approximately, that's where I find my 633. Then I do the same. I come here, I also do the same. I stand on 480, then I look for 516 on the vertical axis. I stand on 400, this is where 480 is. Then I look for what? It was how much? 513, it is approximately here. You see there is arc here. Then join these 2 points, starting from where your fixed cost line starts from. You will start from here. For total cost, don't start from here. It's only total revenue that starts from point 0. So you will stand here, then join these 2 points using a straight line. Use a ruler. Use a ruler to make a straight line. Then once you're done with that, you will actually have a meeting point where total revenue meets total cost. And you just do this, you do this. Then they are telling us that on our graph, we indicate margin of safety. Margin of safety is from here, where your total revenue meets total cost. Where your total revenue meets total cost. It is from here up to the level of output you shed. Also from here up to the level up to where you have the budgeted revenue you shed. That is the margin of safety. Where you see this shaded region is margin of safety. From here up to here, also from here up to here. This level, this dotted line is coming because of your total budgeted revenue. Your shading should not exceed that. We are saying once you get to coordinates, this is your coordinate based on break-even point. Then also these are your coordinates. On your graph, you will need to get the scale based on your total revenue figures, because you must know that as I present my figures on vertical axis, I should actually include all the figures. So you get a suitable scale. Also on horizontal axis, you get a suitable scale. On horizontal axis, the suitable scale you're getting is based on your output. But here, since the total revenue is the one which is always higher, you base on total revenue figures to get the scale. Okay? And because those figures are too much, we indicate those figures here. We put millions in bracket, and these are in our shillings, so that you can ease life. Okay? Now, once you get the suitable scale for vertical axis and the horizontal axis, the starting point should be now to put this, to stand on your, what is your level of output based on the budgeted information. What is your level of output? This is your budgeted information. The level of output is 625. Stand where you have 625. This is where I have here This is where I have 6, because this is 600, then approximately. Now, you will be of course, you will be asking yourself 1 unit to represent what? If you have used the scale you will need to be knowing 1 unit represents what? Eh? So, but approximately my 625 is here. I put like a vertical line to represent my level of output. Then once I'm done with putting this vertical line on my budgeted level of output, then I also make this fixed cost horizontal line. I go to my workings, I ask myself, what is fixed cost? It is approximately 112, because we are keeping millions in brackets. So where do you find fixed costs? On a vertical axis, because on vertical axis, you have revenue and costs. Costs stroke revenue. So it means that I look for where I have 112 on a vertical axis. This is 100, approximately 112 is here. So I put a horizontal line. Are you now okay on fixed costs?
Yes, I'm okay.
Okay. Once you are done with fixed costs, once you're done with this line, now go back at your coordinates. Go back at your coordinates. First, plot this. Stand on horizontal axis where you have 625. Stand there. Then look for 920 on vertical axis. On horizontal axis, stand where you have 625. Then look for 920 on vertical axis. I stand here. This is where I have my 625. Then I look for 920 on vertical axis, and 920 is around here. Because this is 800, 900, then 920 is approximately here. So that's why you see there is arc here. Are you okay? Are you okay at this point?
I'm okay.
Then once you put this first arc, this is like a plus. You can use a dot or a plus to represent your arc. Once you're done, go to the next coordinate. Before leaving, because you need that line for total revenue. Here you are considering this and this. Now go to other coordinates. Another coordinate on the horizontal axis, stand where you have 480. Then you look for 712 on vertical axis. Okay? I stand where I have my 480. This is around here. 480 is around here. That's why you see I have to put something. Then I look for 712 on vertical axis. This is 700. This is 600, 700. Then 712. Is it 712 or 7? We are looking for what? 712. Okay. So 712 is around here. That's why you see another arc. Once you're done, join this arc with this one, starting from origin. Because you know that with revenue, before you sell anything, there is no revenue. So that's why we are starting from the origin. But as you start selling, the revenue will increase. So you get a ruler, join these 2 points using your ruler. But starting from here, that line must be very straight. Are you fine with this total revenue line? Someone who asked, are you fine with this total revenue line?
I'm fine.
Do the same for total cost. Go to your coordinates. Go to your coordinates. This is, you can start from this one, 480. Then you are looking for, on vertical axis, you are looking for 516. This is 480. You are looking for 516 on vertical axis, and it is around here. This is 500, 516 is around here. Then you go to the next coordinate. The next coordinate, this side, total, you stand here on horizontal axis, look for 633 on vertical axis. This is where you stand, 625. Look for 633. This is 600. Approximately 633 is here. But we know that total costs is equal to total variable costs plus fixed costs. You cannot start from zero. So we start from where? We start from where fixed cost line commence, where this fixed cost starts from. So we join these 2 points using also a ruler. Make your line straight and join these 2 points. Starting from here, and you realize that after that you have a meeting point where total revenue meets total cost. You put this line and this one, then you call that one break even. Shade. Now shade. We are going to shade starting from here. You shade. You shade up to, don't exceed the total budgeted revenue level. This is total budgeted revenue level 920. Don't exceed this. Also shade, don't exceed your budgeted output level. Are you now okay? And the shaded region is margin of safety. Are you now okay?
Thank you so much.
Colleagues, are we all fine? Martin, is it clear?
Yeah.
So that's how you will always do. That's how you will always do. And that's all for our question. Okay, question 6. On the required part, they are telling us that we advise CEO on the number of orders of food from customers and transport services required to attain a targeted profit after tax. Every time you see profit after tax, you need to adjust. You need to adjust. By getting that profit after tax, then you divide by 1 minus T. That is 1 minus tax rate. So we need the number of orders of food, number of orders of food from customers and transport services. In short here, when you see such a kind of question, you need to think about just break-even point in units. You just need to think about break-even point in units. So we can handle this very fast. We can handle this now. I believe with our background, this is not very hard. So, which information are you interested in? You will read it through just to have the picture. But I don't want to waste a lot of time. Let me just focus from here. They are telling us that below are the extracts of the budget estimates for the year ending 31st December 2022. You have food supply, you have transport supply. That's why they are telling you that you advise the CEO on the number of orders from the number of orders of the food from customers and transport services. So this is food supply, this is transport supply. You have number of customer orders, number of customer orders. You have commission, you have commission per order. Now here they are not using unit selling price. This is commission. We are dealing with the commission, okay? Then we have variable cost per and apportioned fixed costs per order. So we can start our handling this. Question what? This is question 6, eh? 6? Question 6. We draft our table. Recall that we just need break-even point. We just need a break-even point in the units, orders. And the formula does not change. The formula does not change. We just need fixed. So it depends on how you want it. Eh? Depends on how you want it. Here they have noted that you can just start with break-even point in orders or break-even point in shillings. So if we decide to get break-even point in order, this is total fixed costs. Then we add part, that is profit after tax, divided by 1 minus T. Then everything we divide by what? Divided by total work per order. Or get a break-even point in shillings, the firm's break-even point, the company's break-even point. Yeah? Then we equate it to fixed costs plus part, profit after tax. Then everything we get 1 minus tax. We divide everything by contribution to sales ratio. That's if you want to get the firm's break-even point in shillings. That's if you want to get the firm's break-even point in shillings. I think we can focus on this since we are now clear with this. So our table, are we given a contribution directly? We are just given a number of orders, commission per order, then variable cost per order. And these figures you see for them, they are not in 1,000. Here, no bracket in 1,000. So these are just the figures. So what you will do, you can decide to, because it will help me going forward. Let me start with customer orders. For food supply, how many? Is it 1,260,000? Let me check, confirm. yeah, 1,260,000. This is also, yeah. Okay, this is 540. This is 540. Then from that, I can put commission per order. Then I put shillings. And the figure is 5,000. Then here the figure is 8,500. Then I have variable costs per order. And the variable costs per order, it is this one. That is 2,750. Then here it is 4,590. Then from that I can get unit. I can get contribution per order. That is someone who wants to start from this angle. Okay. So here, but no, cannot do. Here we have contribution per order. We just get commission per order minus variable cost per order. Then the fact that colleagues, since we are familiar with this, if you are not given sales order, if you are not rather sales mix, actually, if you are not given a sales mix, you can get it, or here on the contribution, or the total work, you just focus on contribution per unit. If you decide to get sales mix on your own, as we are going to see going forward, you put here sales mix and get work, since it was not given. But if it is not given, always just use here total contribution per order. Total contribution per order. Just getting this plus this, then the answer will get put it here. So we need the contribution sales ratio. I want to use this formula. We need contribution to sales ratio. This is how do you get contribution to sales ratio? We have different ways. One person can first get total contribution, then divide by total sales. Or for you based on unit contribution, divide by unit selling price. So which one should we use? If you want to get total contribution because of the max, maybe total contribution, it's number of orders times contribution per order. Then here the total contribution is number of orders times the contribution per order. Then total sales, total commission. Here we can use the word total commission. Total commission. Total commission. How do we get total commission, colleagues? Already you have commission per order, and you have customer orders. So you get this number of customers order times the commission per order. Here also get this one times the commission per order. So after that, you can get contribution to sales ratio. Colleagues, if you are not given sales mix, I advise always use this method. Don't start with this method if you are not given sales mix and you're dealing with different products. If you're dealing with different products and you're not given sales mix in the question, or it is good to just start from use this method. How do we get contribution to sales ratio? We said it is total contribution divided by total sales. Our total sales are these ones. Here our figures are in shillings. Here our figures are in shillings. So we just get this figure, then we divide by this. We can round off to 3 decimal points to be very accurate. Round off to 3 decimal points. Then here, get this divided by this. But as if here I made a mistake. How did we get total commission? I think I made a mistake here. To get total commission, we are getting customer orders. Remember, commission is commission per order. So here we are getting customer orders times commission per order. Here we are getting customer orders times commission per order. I think this is the right figure. Get also here total contribution divided by this. We are rounding off to 3 decimal points. Here the total is this. You look at the final figure plus this. Then this plus this. Then the total, getting this divided by this. With this number, with this, when you're dealing with this sales contribution to sales ratio, you need to be very accurate. Otherwise, at the end, you can get wrong things. Like here, if you want to, let's say you want to rely on, this, you will get it wrong. We normally take the overall one. Don't say that we get this plus this. Because if you get this plus this, actually you realize that you're getting different things. That's why I said let's first use this and we also appreciate how we use it. So don't take this one as the way we handle total contribution, total weighted average contribution per unit. Don't, because with total weighted average contribution per unit, we actually be adding whatever we have on that line. But this one, focus on the last one. by getting your total contribution, this formula, total contribution, then you divide by total sales. Then you get contribution sales ratio. And for you to be very accurate, actually, we recommend that you maintain the decimal points the way you have on the calculator. For you to be very accurate, don't round off when you're using this method. Yeah? However, people won't be marking, they know that people round off, they can give that approximation. But to get the accurate figure, it is good not to round off this figure. Just take it the way it is and continue. So that is our contribution sales ratio. That is our contribution sales ratio. So do we have everything in the question? Do we have fixed costs? Because now we have contribution sales ratio, we can substitute in the formula. We get farms break-even point in shillings. That is the revenue. Will be equal to, what is our fixed cost in the question? Our fixed cost in the question, how much? Our fixed cost in the question, how much? How much our fixed cost in the question? They are telling us that, do we have fixed cost in the question? Who has seen it? Okay. It must be even. Who has read it through?
I think there are those ones in the table below.
Yes. Yes, it is not direct. So we can first get, we can also get our fixed costs. Oh. Yes. They were not direct. So here below the table, maybe you can also add another. You were given apportioned fixed costs per order. Oh, and for this product, for this service, food supply, how much? You tell me. This is apportioned fixed cost per order, which is 1,680. 1,680. Then for this one, it is 3,760. Then to get total costs, I can get here total costs. Total costs by multiplying, I get customer orders times this. Then also here I get customer orders.
Excuse me.
Yes, please go ahead.
The apportioned fixed costs for food supply is 1,680, not 1,380.
This is 6.
Yeah,
Thank
that
you.
is 6.
Thank you. Then the total fixed costs we add. We get this plus this. This is total fixed costs. And our figure is this one. So we go back to our formula, we substitute. Total fixed costs, we are saying it is 4,147,000. Is it 200? Yes. Then we add what is our profit after tax in the question, 110, 810,000. Let me confirm whether it is the right figure. In the question, they told us that the profit after tax is 110.81 million. Okay, and we are not keeping zeros. You see all our workings, we are not keeping zeros. So I write the figure the way it is. 100. Let me hope this is the right figure. Okay, this is the right figure. Then we divide by 1 minus that, divide by 0.7. Divided by 0.7, then everything we divide by our contribution to sales ratio, which is this one. We divide by this. So on your calculator, what do you get? Remember, the figure you get is in shillings, not in units. So use your calculator accurately and tell me the figure. If I put the answer, you'll be ready to use your calculator. Please be familiar with using the calculator. Someone in the chat is saying, pardon on how that 0.45421 came about was after adding. Don't add. I said don't add. That's why I said it is good to use this method. Don't consider this method. Don't consider this as the total weighted average contribution per unit. It's only and only total weighted average contribution per unit where we add what we have here plus here. Like you look at each product separately. When it comes to contribution sales ratio, we don't consider what you have here. We consider the overall total. We get the total for one category. This one plus this one, get total contribution. Get this one plus this one, get total sales. Here we are getting total commission. Then you will rely on these totals to get contribution to sales ratio. That's why I had to remove those things here to avoid the confusion. That's why I had to remove those things to avoid the confusion. But with total weighted average contribution per order, you add what you have here plus what you have here, then you get the total. Kindly note the difference. Note the difference. And when you're using this formula, you are getting your answer in orders or in units. But when you're using this formula, your answer should be in shillings. Yes. Let me hope now you're okay. All right. So, what do you have? The final answer? And I said it is good to leave those decimal points to get the accurate figure. This is
478.
for you. You are getting 4. The first figure is what?
9 billion
9
478 993
993
814.
814. All of you have this figure? All of you, do you have this figure? If you have a different figure, check here again your calculator. So we have farm's break-even point in shillings. So we need, remember the question is, we get
Yes,
the
that's what I'm.
all right. Perfect. Remember the question is saying we get the number of orders of food from customers and transport services. So it means that actually if they ask you the number of orders, they are trying to tell you to find out the break-even point in units for each category. So what you're going to do here, once you have this, create another table. The first one, your food supply. This is food supply. Food supply. Then the next is a transport supply. So those are the only things we have. Then here you can put break-even point. You start with break-even point in shillings. We always start with what we have above. We cannot start with break-even point in units, yet we have farm's break-even point in shillings. So we put here up break-even point in shillings. Then after that, what we are going to put is break-even point. Maybe you can put unit selling price. Are we dealing with selling unit commission? Unit commission. Commission per order. Commission per order. Then after that we put break-even point in units. So how do you get break-even point for food supply based on this? You just get your sales mix. Now, this is where sales mix is going to come in. So it means that you need to do a working for sales mix. Sales mix. And how do you get sales mix? You just get here the total sales mix. The formula is individual commission or individual sales, then everything divided by total sales. That is the formula. So it means that if you're looking at food supply, individual sales, individual commission is this one. Then the total commission is this one. So you're going to get total commission for food supply. then divide by total commission, the overall total commission. And this one, it can be in three decimal points. Approximately, for sales mix, approximately 4 decimal points or 3 decimal points, don't you? That's where you can get the accurate figure for sales mix. At least 3 to 4 decimal points. Then here you get this individual commission divided by total commission. Then you can maintain like 4 decimal points. So we have sales mix. Then you come here, just get sales mix for food supply. What is the sales mix for food supply? It is this one. Then multiply by the overall break-even point in shillings. And you have that. Let me hope you are getting the same answer. Then for transport supply, the sales mix is this one. Then we multiply by this one. So this is break even. If we want to get the total to confirm, you will find that you have the same total. But in an exam, you don't have that time. If you get this plus this, it must give you this. Then commission per order. Already we have that. Commission per order, it is this one here. Then for transport supply, commission per order, it is this one. Then we need break-even point now in units. Who can tell me now? How can we get break-even point in units? Who want to try? Who wants to try? You have revenue. You have the unit selling price. Can't you
You
get the
divide the revenue by the orders,
Yes.
by the commission per order.
Yes. Here you don't multiply. Don't multiply. You just get this divided by commission per order. And the fact that you're dealing with units, round off to the whole number. Since you're dealing with units, round off. All these ones change to orders. These are orders. Then you do the same here. Get this, divide by this. And that's all. If they ask you the firm's break-even point in orders, get this plus this. So it means you have answered. We are to advise. Okay. So how are you going to advise? You can just write a short note. Maybe you say that the CEO. You can just write maybe in your book. The CEO should be aware that this company. What is the name of the company? Let me see. Okay, this is the name. The CEO should be aware that STCL requires to get, you write the orders, requires to get this one, orders, and this one, orders from a food and transport service customers respectively to attain target profit after tax of 110.81 million for the year ending 31st December 2022. The CEO should be aware that STCL requires to get this one, orders. You write this one, then you put orders. And you write this one, then also put orders from food and transport service customers, respectively, to attain a target profit, to attain a target profit after tax of 110.81 million for the year ending 31st December 2021. Is it clear? And that's all about that number. That's all about that calculation question. You have limitations of CVP. With limitation, just they come from assumptions. You just make the opposite of assumptions. This is question 7. On the required part, they are telling us that we construct a break-even chart to show this company's margin of safety for the second quarter. So this is like actually question 5. The same knowledge, you need two coordinates at budgeted level and also at what? At break-even point level. But how do you interpret the question? Just me, I need to interpret the question, you will finish everything. We need to know, to read through, we can read through the case study very fast. They are telling us that LMS is in Wakiso district, was established in 2010 by this person who is ED. The company's objective is to make profits through provision of affordable medical services to the community. This link medical service has PD, PS, then also GM as operational departments, each headed by experienced doctor. All other activities, so we have departments here. All other activities are controlled by administration and finance department, headed by a certified public accountant. All departmental heads report to ED and together form the senior management committee. So this one, you don't need to come back to this paragraph again. SMC, that is what? That is senior management committee, holds quarterly meetings to review previous quarter performance and plans for the next quarter. During the last quarterly meeting, PD and PS heads expressed their concerns about arbitrary performance measurement and overhead cost allocation methods used, which always show their documents, which always show their departments as loss making. So here you are observing two departments that are always making losses, PD and what? PS. And the ED, the ED, who doubles as the chairman of senior management committee meetings, requested administration and finance head during 2019 third quarter meeting to address the issues raised by PD and PS heads. This meeting was adjourned to allow administration and finance head provide revised financial performance statement for the second quarter of 2019. So you also don't need to come back to this paragraph. This head, administration and finance head, considers using CVP analysis and activity-based costing. So colleagues, here we have two tools, CVP and ABC are the best tools to address the worries of PD and PS heads. Accordingly, rent and administration expenses will be allocated to departments according to floor space occupied. There is the reason why they are giving you this. Accordingly, rent and administration expenses will be allocated to departments according to floor space occupied. The fact that there is ABC system, you need activity rate, you need the cost driver. The cost driver is floor space as you allocate rent and administration expenses. While administration salaries and general expenses will be allocated according to sales mix. Very key here also, as you allocate administration salaries and the general expenses, you should base on sales mix as your cost driver. Utility costs vary with the number of patients. This is also very key. Utility costs vary with the number of patients handled. It means that these utility costs are not fixed costs because they base on number of patients handled. The more the patients, the more the utility costs. So this will be part of your variable cost. But they are telling you that the prices have been maintained. What are the prices here? Other things given. Okay, so below is the departmental financial performance for the second quarter that ended 30th June 2019. You have number of patients handled. You have revenue. This is not per unit. This is not per patient. This is total revenue. You have costs, cost of sales. Then under cost of sales, you have medical materials used. This is not per unit. This is not per patient. These are direct labor wages. Then after that, they are giving you subtotal. From that, you have gross profit. You have operating overheads. Here, this rent and administration expenses is different from administration salaries and general expenses. They are very different. It is also different from this one. This is a separate item. Okay, we have additional information. LMS had planned to make a profit after tax of this by handling 2,500, then 3,500 patients respectively during the second quarter. This was their plan. This was their plan. They are telling you note number 2, the rate is this. Then note number 3, you have PDPS GM departments occupy. Now you have floor space. This one is going to help you when you're answering parts of the question. Parts of the question where they are saying you assess the effect of changing the costing system on departmental profits. That's where ABC will apply. The effect of changing the costing system. Initially, you are using CVP. You want to change to ABC. What will be the effect on your departmental profits? So here you use ABC. So how do you interpret the question? Okay, how do you interpret the question? This is question 7. Question 7. We need to interpret this together very fast. So what you will do is to just make the table, because it is the same scenario. You see this question, it is the same scenario. Part A, break-even chart. We need a break-even chart. You need the coordinates. Just a summary. For break-even chart, you need 2 coordinates. You need to look at break-even point level, get coordinates, then also look at the budgeted part, budgeted level. Also get coordinates. Okay. Coordinates, we need units. We need units. Patients. We need total costs. We need total revenue. The same applies the other side here. These are total patients. Also, these are total patients. Okay. Then how are you going to get break-even point in terms of patients? You will obviously need to do a working. You will need to obviously do a working. In the question, have you seen somewhere sales mix? Have they given us sales mix somewhere in the question? In the question, they didn't give us sales mix anywhere. Like the specified sales mix, it's not given. They have not clearly specified sales mix. However much you have this word sales mix, but you don't have sales mix for each department. So if you don't have sales mix for each department, or if you're not given sales mix in the question, the best approach to answer the question is to first get break-even point. The farmers first get farmers break-even point in the shillings revenue. By simply getting what we do this side. By simply getting a fixed, total fixed costs, then plus profit after tax divided by 1 minus tax rate, then everything divided by contribution sales ratio. Every time you are not given a sales mix, the direct sales mix in the question, always approach the question using this formula. But if you're given a sales mix in the question, then start by getting the farm's break-even point in units. Then down here, put total weighted average contribution per unit. Then get the answers in terms of units. So know how you approach these questions. Without break-even point, rather without sales mix, I approach the question using this formula. Then with sales mix, if sales mix is given in the question, I approach the question by starting with firm's break-even point in units, whereby I get total fixed costs plus profit after tax over 1 minus 2, then everything I divide by total weighted average contribution per unit. Okay, so we don't have contribution to sales ratio, which we need. What are you going to do? Create columns. The first one is for details. Details. Then another column is for departments. You have PD, you have PS, you have GM. Then you can get total. Okay. Then after that, what are you going to start with? Okay, I can just for formality, because these things will help me somewhere. I need a number of patients somewhere. Number of patients. Here you have 1. Here you have 1498. Here you have 321. Then 2568. That's based on our question. These are our number of patients. Okay. Then from that, I am given a revenue. I'm given revenue. If you don't want to waste time, you can put your amounts in 1,000 this side. Or if you see that it will confuse you, then work in 1,000. You copy the figures here, revenue, all the figures are here, put them that side. And here you have 470,000. Then here you have the next one is 16,050, 1,000. Then the next one is 25,680. Okay. Remember to get contribution sales ratio. Recall our formula. Do you recall the formula? Who can tell me? Who recall the formula? Total what? Total contribution. Then divide by total sales. Total sales. For all products or for all departments. That's how you get contribution sales ratio. So it means that here we need also total by getting this plus this plus this. That is our first total. We have now total sales. Total sales is the same as total revenue. And this is our total revenue. But we don't have total contribution. We don't have total contribution. And that's what we are looking for. So after revenue, what you need is what? Your variable costs. Your variable costs in shillings. But you see, variable costs are not given directly. You don't have the unit variable cost to just simply multiply. You need to identify among all these costs, all these items, what are variable costs? What are the costs that vary with the number of patients handled? Those are variable costs. Of course, variable costs, you'll be having what? You'll be having medical, medical materials used. You'll be having direct labor wages. Then the fact that they said utility costs vary with the number of patients, I will also need departmental utilities as part of my variable, costs. Then other costs will make part of the fixed costs, like departmental salaries, rent and administration expenses, then administration salaries and wages. These ones will be part of my fixed costs. But this one, then and this one would be also part of fixed cost. But the fact that they told us here, utility costs vary with the number of patients handled, then it becomes part of our variable cost. So here I will put medical. I will put here medical materials used. Then I will put here direct labor wages. Then I put here departmental utilities. Then from there, I can create a line for total variable costs. So the figure here, it is, but for you can put these figures in brackets. Here you have 5,450. Then here another one here you have 730, rather 930. But these are the only costs without a thousand. Let me check in the question. Whether these figures are just like that. Yes. Yes. I am just copying the figures in the question. Colleagues, if I talk about something and it is not clear, please seek for clarification. Don't keep quiet. Departmental utilities. Now I go to departmental utilities. These are utility costs. So I write this. I will write this. Departmental utility for it is this one. Then if I need total variable cost for just PD, I will just get this plus this plus this. Then if I need total contribution is equal to revenue minus variable cost. So it means that to get contribution, I get my revenue, which is here. I subtract total variable cost. Then I do the same for others. Here it is 2,375,000. Then here it is 78,000. Then here it is 525,000. Then the total, I add this. I do the same. I just add this plus this plus this. Okay. Then then to get contribution, I get revenue minus my variable cost. Okay. I am doing this. Okay. Then here, medical materials used for GM department, it is 6760 in our question. Then here it is 1,750,000. Then here it is 1,324,000. Then the total, I add this plus this plus this. I will get that. Then the contribution here, I get revenue minus variable costs. Remember the formula, I need what? I need the total contribution. So what is my total contribution? I get this. I add this, then add this. And that will be my total contribution. Rather, yes, my total contribution. So since that is my total contribution and I have my total sales, I can get contribution to sales ratio, whereby I am just going to get total contribution. Then I divide by total revenue. By just doing this, you can also work from your table. You just get total contribution, which is this one, divided by this one. And that will be your contribution to sales ratio. Okay? Once you have that, remember, we need, on our formula, we need total fixed costs. And we don't have total fixed costs directly. So you go ahead and get your fixed. Look at your fixed overheads or fixed costs. With fixed costs basing on our question, we have departmental salaries, we have rent and administration expenses, we have administration salaries and general expenses, because there is nowhere where they said these ones vary with the number of patients, 100. So here it is, you have departmental salaries. Then you need also to put here rent and administration utilities. These are different from departmental utilities. These are rent and administration utilities, which is a separate item. Then this is admin salaries, and departmental salaries. Our departmental salaries for PD, it is when you check in our question, our departmental salaries, it's here. Then our rent and administration expenses. How did I phrase this one? It is just rent and administration expenses, not utilities. Rent and administration expenses. departmental salaries, we have 5,400,000. Then for rent and administration, we have 4,270,500. Then this one, admin salaries, we have 5.9 million. Then if I add the total here, this one plus this plus this. Then for this department, that is PS, departmental salaries, it is 6 million. Then here it is 4,270. No, here it is 500. Then here it is 5.9. Let me first confirm about rent and administration. Rent and administration. Yes, there is 5 somewhere. Then the total will be that one. I do the same for another department. This is 4.8 million. Then this one is 4. So the number is easy, but time to do these things, you need it to be very, very fast. Am I copying the right things? Fast. So colleagues, you need to be very, very fast. Need this. How about those other costs below in the question? Let me check what are those costs in the question. Someone in the chat is saying, what about those ones? Additional information, we have only profit after tax. Then plus the planned patients be handled. I don't know, what do you mean? Other costs.
No, I was actually meaning the admin and admin salaries, which those
These
actually
ones,
it's
these ones.
yeah.
I am recording them. When you check, I'm actually recording them. Where are we? It's here.
Oh, okay.
I'm recording. But as if for here, the figure, I don't know. Yes, I think the figure here is the same. When you check administration salaries and general expenses, the figure is the same. You get? But others, for departmental salaries, then rent and administration expenses, the figures are not the same. Don't consider these ones as variable overheads because they didn't specify that these are variable overhead. They don't rely on the number of patients handled. Since they were only direct on the utility cost, that it's the only one that vary with the number of patients, the assumption is that other costs, other items are fixed costs. So you have this. The first item is this, the second item is this, then the third item is this one. Are you fine?
Yeah, it's okay. Thank you.
All right. Then here it is 5.9. If we add, we will get this. We will get this as total fixed cost. But remember, our interest is just to get total fixed costs. So I get this plus this plus this. So that is my fixed costs. So it means that I have everything satisfy my formula. I have total fixed costs, I have profit after tax, I have contribution to sales ratio. So I can get farmers, I can get farmers break-even point in revenue in shillings, whereby I'm going to get my fixed costs, which is this one, fixed costs, which is that one. Then I add my profit after tax. What is profit after tax in this question? They planned to make a profit after tax of this. So that is my profit after tax. Here, my profit after tax is this. Then I divide by 0.7. Because this is profit after tax, I have to adjust it to get profit before tax. Okay. Then everything I divide by contribution to sales ratio, which is this one. Everything I divide by contribution to sales ratio. I don't know, what do you get on your calculator? This, getting this plus I open bracket. My fixed cost is this. Please be doing also on your calculator. By 0.7. Everything I divide by put bracket. Put bracket. Then everything I divide by this, by contribution to sales ratio. I divide by contribution. Oh. Do you get this? No. Here I have to divide by this answer you have, it should be divided by this. I don't know whether you have this figure on your
Yes.
calculator. That's what you have?
Yes.
Perfect. So that is our farm's contribution. Rather, that is our farm's break-even point in the revenue. You know, after this, the working we do, we put our departments, that is PD, put here PD, put here PS, then put here GM. Then get break-even point in shillings in revenue. Then also another column you put break-even point in in units, those are patients. How do you get break-even point in revenue? Break-even point in shillings, you need a sales mix. So come here and do the working for sales mix. And the sales mix, we said it is individual sales divided by total sales. Individual sales divided by total sales. And divided by total revenue, which is this one. So my sales mix is this. Colleagues, are you hearing me?
Yes.
Let me first pick this one. So colleagues,
You're breaking.
what about now? Are you in a position to hear me?
Can hear you now.
All right. So are you okay on how we are getting sales mix? Individual sales is the same as revenue. Okay. So we are getting the revenue for PD, which is this one. We divide by the total revenue, which is this one. You'll be in a position to get 0.35. You do the same for another department. Revenue, individual revenue, the revenue for PS divided by total revenue. Do the same for this to get this amount divided by this. So that is your sales mix. And once you have sales mix, come back here and get break-even point in revenue for each department, whereby you are going to get the sales mix for PD, which is 0.3. Then you multiply by the firm's break-even point in revenue, which is this one. You do the same for PS. What is sales mix for PS? It is 0.25. Then times firm's break-even point in revenue. So revenue, we can make a whole number. Then lastly, you also do the same. Here it is 0.4 multiplied by farmers break-even point in revenue. Then how do you get break-even point in units? Here you can first, no, that is wasting of time. You can just get the revenue you have here divided by the selling price. Do we have the selling price directly? in this question? Are we given the price? Unit price, unit selling price. Are we given that one in the question? If we observe your question, are you given that? Let's analyze the question and see whether we are given that amount. We are not given this amount direct, but we can get, because we have number of patients handled, then we also have the revenue, the total revenue. Don't you see that we can get? I think we can get. We can get, I think, to my side, we can actually get the unit selling price. So how are you going to get the unit selling price? You get total revenue divided by the number of patients. So here, I am going to get this value. No, this value, I divide by this. I get this value divided by this. I get this divided by this. That's how I'm going to get unit selling price. I get my revenue, which is here. I divide it by number of patients. I do the same here. I get my revenue, which is this, divided by this. Then I also do the same, revenue is here. I divide by this. So that is basically my unit selling price. And once I get unit selling price, I can get the break-even point in terms of patients by getting this divided by this. But these are patients, you round off to the whole number. So you do the same, get this, divided by this. Get this, get break-even point in revenue divided by unit selling price. So you round off to the whole number. And remember, as we answer the question, what is our focus? Our focus is to get total break-even point patients. Remember, it is one of the things we need as we plot, which will be this plus this plus this. So you need that as you plot. You need that as you plot. Okay. So we have, you see, part of we have handled out of this. You see this question, colleagues, it is easy, but time. You need to really be fast. You have this now, the break-even point, the total break-even point in patients, which is this one, terms of patients, the one we have just calculated, this one. Then what else do you need? You need the break-even point, the total break-even point in terms of revenue, which we have. The farm's break-even point, we have it. This is our farm's break-even point. The overall, we have it. Then what else? We need also now total costs. Do you recall how we get total costs? Variable cost plus fixed costs. So the next burden is to get, I can put here total costs. How do you get total costs? Here it will be fixed costs plus variable costs. Fixed costs is equal to, rather total cost is equal to fixed costs plus variable costs. And already you have everything. You have total variable costs. You see the good thing is doing this. You get this plus this. You do the same for all. I get like to get this figure, you get this is variable cost, you add fixed cost here. Then what is your total? You get this plus this plus this. But I think this one is not based on, but you see this question, colleagues, you need to apply your reasoning. You need to apply good reasoning. You need to apply good reasoning. Remember the fixed costs you're getting, colleagues. Rather the total costs you're getting are total costs based on what? Based on the budgeted level, rather based on the break-even point level. So it means actually I can use the best approach is now to first know the variable costs per patient. That's what I am thinking about. If I know the variable cost per patient, like here, I get total variable costs. These ones I divide by number of patients. Then I put this one, let's say, in a whole number. Then I do the same. Here I get total variable cost divided by number of patients. Then I also get this total variable cost divided by number of patients. Okay. First do that. Then once I have that, I attach here budgeted, rather break-even point in terms of patients. Break-even point in terms of patients. Then it will be here. We had how many? We had that working. Eh? We had that working somewhere. That working is where? It's here. We have these ones, break-even point, patients, they are here. So what I'm going to do is to put here, I have to put this one here. Our break-even point in terms of patients, it is this one. After that, to get total variable costs, I'm going to get this. I add the, no, I times, I multiply by this. That will be my total variable cost. Then next, I get this, then times this. We round off to the whole number. That's what I have. Then the total here, what is the total? I get this plus this plus this. That is the total I have. Then from that, remember my fixed costs. Remember total fixed costs. Remember total fixed costs was how much? Total fixed costs. Total fixed costs was actually this. So to get my total costs based on the break-even point in terms of patients, it will be this one plus this one. Are you seeing that? So we have our coordinates now. We have our coordinates. Our coordinates based on break-even point in terms of patients, break-even point level. Number one, we have break-even point or total patients at break-even point. At break-even point, total patients are how many? We have that total. We have that total, which is this one. It is this one. Which screen are you seeing? First, confirm which screen are you seeing?
The workbook.
Does it have funny things?
No.
Okay, then. Then another one which we have is total costs. Then total revenue. The total costs are these ones. These are total costs. Then the total revenue, what is the firm's break-even point in terms of revenue? We calculated that, which is this one. So you see now we have everything. You will look for coordinates based on the budgeted revenue. Coordinates based on the budgeted revenue. You will do a working and and handle that. You will need total patients, total patients, total patients, total patients. Do we have budgeted total patients now? Are we going to, the question is, are we going to use, if you use this, let's say, because we have two information, we have this, if you say this plus this plus this, sorry, plus this, you get this. Remember, in additional information, you have another statement saying that they had planned to make this by handling this. So it means that as you get the budgeted level, based on these units, based on these ones, based on these patients, don't base on the other one, just based on these ones. This, get this plus this plus this. That's what you're going to base on. And total patients are how many?
$6,000.
That's what you're going to base on. Don't base on the other one. This will be, this, we will not use this. We will use 6,000, isn't it? Then what else do you need? Budgeted. You need the total revenue based, total revenue. You also need the total costs. Are you going to finalize everything? For total revenue and total costs, are you going to get? I want you to do this. Doing everything is making you lazy.
Abel,
Yes, please.
so when we are doing that other part that you're leaving us, we shall be using these other customers in the additional information.
Yes, yes.
Hey, okay.
Use the one in the additional information to get this. To get this and this. Isn't it? Because you see what you have, like here, total revenue. Total revenue, remember to get total revenue, it is unit selling price times the units. Now it will be is unit selling price. So just to get this times the number of patients in the question in the additional information. Are you hearing me?
Yes.
Yeah.
This time the number of patients in the question, this time the number of patients in the question. Then after, at the end, add. You do the same also for variable cost. Variable cost, remember you will need the total cost here. But to get total cost, it is total variable cost plus total fixed costs. But how are you going to get variable costs, total variable costs? Already you have variable cost per patient. This is the variable cost per patient. So you get this times the number of patients in the additional information. This time the number of patients in the additional information. This time the number of patients in additional information. Then you will have these coordinates. Because once you have total variable cost, Like the way we have here total variable cost, you will add this fixed cost to get total cost at budgeted level. Will you fail to do that? So that will be all. You have two coordinates. You go ahead and do like what we said, how to do the break-even chart on the question. It was question 5 or question 6? It was question 5. So you follow those steps. You follow those steps. But the question is too long. We still have the journey. So at the end, colleagues, what you will have, just to have the background. You will have something like this. Are we together, colleagues? You'll have something like this as your break even. This will be your budgeted level. That's what we had. I think our break even point, we had this. Something like that. Then this was our break even point. So you will just have that draft. That draft. Just use the graph book. The shaded region is the break, is your margin of safety. That's what you will have at the end. So, can we stop here? Or we finalize the question?
We finalize.
Don't know why my machine is misbehaving. Okay, so you will be having this. Then remember, you are working for only how many marks? 8 marks. Then part B, margin of safety. Margin of safety, and you do ranking. So how do you get margin of safety? Margin of safety. Margin of safety. Record the formula. It can be margin of safety in units, or it can be margin of safety in shillings. Margin of safety in units, we said that is equal to budgeted units, budgeted units. Then you subtract break-even point in units. That is margin of safety in units. Then margin of safety in shillings, or in revenue. It is equal to budgeted revenue, or budgeted sales, then subtract break-even point in revenue. Okay, so you can handle that. But they said what? You need to analyze the question very well. They said what? You advise this company's senior management on the risk rankings of its department. So how are you going to do that? How are you going to do that? It means that you will need a table. You will put here. You will put here PD. You will put here PS, then GM. Then this is your details. Then you will put the planned patients. You will need the selling price. You will need the budgeted revenue. Then from that you compare it with budgeted revenue. Rather break-even point, but in terms of revenue. Budgeted units for PD is how many? How many patients? In additional information, 2,000. Then here it is 500. Then here it is
3,500.
3,500. Am I copying the right things?
They are right.
Okay, the unit selling price, we said it is how much? We calculated that originally. Was it 15? 15,000. Then here it was what? 50? Is that the figure we?
Yes, it's the one.
Okay, then budgeted revenue we multiply. We get this figure. We multiply by this figure. Okay. You do the same for all. Then this one already we have. This one was how much? We have these figures. This one was how much? Was it 26, something like that? 26. We had those figures. What there was a working for that. This is the information. Are you seeing that break-even point in revenue? This is the information we need. So it is that being here. It is it is here. So I will just copy and paste to the other side. Is here. Then for this one it is then this one it is I'm labeling much. This area, actually, you just needed to know that it is not hard, but time. So once you have that, you can get margin of safety. Margin of safety. We said from now we are getting in terms of shillings. So it is budgeted revenue. We get the budgeted revenue, which is this one, minus this. And that is our budget, our margin of safety in shillings. So to comment, for you to comment the risk ranks, you need risk ranks now. You need risk ranks. You can convert this into terms of percentage. Once you have this, you can convert it in terms of percentage margin of safety, so that you can rank very well and compare margin of safety, because you cannot advise very well minus percentage. You need to know which one is performing well, which one is not performing well. So you get this. What is the total here? Do you know how we get margin of safety in percentage? The one in percentage, margin of safety in percentage. Do you know how we will get that? Actually, we just get this one, the one you have above. Let's say this one, the one you have here. Then divide everything by the budgeted, revenue. That's what you're going to do. Then multiply by 100 times 100. So what do you get? We get this figure. Already this is our margin of safety in shillings. We divide by the budgeted revenue. That is the percentage I have. If I round off, let's say to 2 decimal points, we just put in a percentage. Then I do the same here. This divided by, colleagues, are you getting the way I'm doing it? Eh? How to get margin of safety in percentage? You follow this formula. But already what is up, budgeted revenue minus break-even point revenue is your margin of safety in shillings. So I just get this figure divided by budgeted revenue. If I put percentage in 2 decimal points, that's what I have. You get this divided by this. Oh, what am I doing? Let me just put the percentage. So that is, it can help you now to know the risk ranks. You can rank and comment very well. Huh? Which one comes in the first position? Which one is the best? Which one is highly risky?
PS.
Now you need to know the margin of safety. Huh? You need to know the margin of safety. Actually, it is not PS, but it is this one. This one. This one will be in the first position. This one will be in the second position. And this one will be in the third position. In short, PS is less risky. This one is less risky. But this one, so risky. So as you conclude advice, you will say that according to the margin of safety ratio, PD department, this is PD department, is high risk, followed by GM department, and followed by PS department with less risk, which is less risky. Part C. Part C. Part C. They told us to do what? Part C, they told us to assess the effect of changing the costing system on the departmental profits. Already we have the departmental profits when you check. These are our profits. These are our profits. So what is the impact of changing the costing system on the departmental profits? So what you are going to do, remember originally you are using CVP analysis. Now you want to use ABC analysis. What you're going to do is to actually first get, I can put here, let's say I can put a PD, I put here PS, I put here GM. Then I first know the reported, this is our shillings, this is our shillings, this is our shillings. Then I can put here reported net profit. For PD it is 5.7. Then this one is 3. Then this is 6.7.5. But it looks like some figures are in bracket. Oh, yes. Some figures are negative. So we put this one as a negative. For you, you put those figures in bracket. But here it is 500. So that is my reported net profit. What you're going to do, colleagues, you will, because what you want to analyze is just this one. You analyze colleagues, are you hearing me? You're analyzing this statement here, this one. Colleagues, are you on?
I'm
Yes.
on.
I want you to understand, since you're able to stay on, I want you to understand this part C. We are analyzing basically this paragraph, and they are telling us that accordingly, rent and administration expenses, they are basically telling you rent and administration expenses will be allocated according to floor space. Then administration salaries and general expenses will be allocated according to what? Sales mix. That is, if you decide, we know that allocation comes in when we are applying activity-based costing. Okay? That's when we need the cost driver. And the cost driver helps you to get the activity rate. So it means that we need the activity rate first. before we do. And how will this effect come in? You will need to know that as you adjust, basically you are adjusting, you'll first add back. You'll first add back the thing they have talked about. In the information, they talked about which item? Rent and admin, admin expenses. We are adding back the reason I'm going to tell you the reason. Because you see that this reported net profit includes these items they have talked about. But we need the net profit using ABC when we have actually calculated the right amounts of rent and admin, then also admin salaries and general expenses. So you have to first adjust. You have to first add back to restate its original position. You want to restate net profit without rent and admin expenses, also without admin salaries and general expense. That is your reason. You want to just make sure that you restate the net profit without these items. Then once you get the right figure for rent and admin, then also for admin salaries and general expenses, you subtract. So originally, what was the value for rent and admin? What was the value for admin salaries and general expenses that affected this net profit? Remember, we had those values. We had those values in the question. You see, this is your rent and admin. Then also this is your admin salaries and general expenses. So those values you are seeing here, these ones, this one and this one, affected what? Affected your net profit. So we need to first remove those things by adding them back. So I can copy the figures, just simply copy. These are the figures, I think the last. My laptop has worked for so long. So I copy this, then I add them back here. The answer you get here, if you get this plus this plus this, the answer you have here is net profit without these two items. Okay, so we know that to get the actual net profit, these items must be applied. You have to raise now. What is the actual rent? What is the actual rent and admin expense Then what is the actual admin salaries and what general expense. To get these actual figures, you must apply now ABC. You get the right figures. So we must first do a working for ABC. Using ABC analysis, what is the total cost for rent and admin? What is the total cost for admin salaries and general expenses? Of course, you need activity rate or cost rate, activity rate. Do you know the formula? Overhead, total overhead divided by cost driver. That is with ABC. That you need it first to know the activity. So what we are going to do is to know how much, what is the total rent and initially what was the total if you sum up? If you sum up, what was the total? If you get this plus this, then plus this. That is the total. Okay? That is the total. Then, if you know the total, that is the total overhead. What is the activity rate? Your cost driver in this case is what? Your cost driver. Understand what is your cost driver. In the question, they said, what is the cost driver? How do we allocate rent and admin expenses? This is based on the what? Floor space. And the floor space, it was given as, it was 50. Then you have 30 square. Then you have 70. When you check in the additional information, when you check on your additional information, that's basically what you have. Additional information, we have 50, 30, and what? And 70. Okay? So it means that from that, sorry for the delay, colleagues, but my has overworked. So, Safira, finally you are back. We are here. We need the actuals for PD. What we are going to do directly here is to get, you just get 50 divided by what is the total ratio? 50 plus 30 plus 70. What do you get? You get 150. Then everything you multiply by the, everything you multiply by the, everything you multiply by the, by this cost. You do the same for PS. The ratio is 30. I get 30 divided by 30 divided by the total floor space, which is 150. Then I multiply by the overall total. I do the same for the final department, which is the ratio, the floor space is 70 divided by the total floor space. Then everything I multiply by this. Are you getting how I'm trying to get this? You will do the same for admin salaries, for admin salaries, and the general expense. You just need first to know what is the total. What is the total? The original total was, if you see, this was our, you get this plus this plus this. That is your total. And what is your cost driver? Cost driver here is what? In the question, they said it is sales mix. In the question, they said it is sales mix. Here, when you check here, this word, administration, salaries, and general expenses will be allocated according to sales mix. So what was our sales mix? If you recall, our sales mix, we had something like 0. We had 0.35, was it 0.35? If you check in your book.
Yes.
Yes.
0.35. Then this one was what? The next one was 0.25.
0.4.
Then 0.4. Eh? So that was our sales mix. Eh? So it means that what I'm going to do is simply getting 0. Here. I just simply get 0.35 times this. Because already these are in decimal points, they are already we have already converted them from percentage. 0.25 times the total. Then also here get 0.4 times the total. So finally we need adjusted net profit. Remember, this is what we have. This is profit without rent, without these two items, these ones. So you want the final net profit. You want the final net profit. And it will be, you get this figure minus this, minus this. Okay? You also get this minus this, minus this. Then finally, you get this minus this minus this. So that will be your impact. But to know the impact very well in terms of percentage to advise very well. When you find that you have a lot of information, you can get the percentage effect to advise very well. And the effect will be to get the percentage. You just get new minus old over what? Over old. To get is like the percentage change. So if you get, if we get what is our new figure? It is this. Use your calculator, colleagues. It is this one minus what was the old one? The old one was this. The old one was this. The one stated in the question. The old one which you were using CVP. The new one you are using ABC. The previous one was using CVP. Okay, then we multiply, we divide by the old. The formula is new minus old over old. Do you have this in the percentage multiplied by 100? I have something like this. If you round off to decimal points or to 1 decimal point, 2 decimal point, I have this. Do you have the same? It is new. Remember, for you on your calculator, make sure that the figure is negative. You put negative that minus. Now the other number was also minus, so it means that for you you'll be putting a plus. But for me with this machine, I can just say minus that. Then divide by the old. Still the old is this. Then the answer you have here, I put it in percentage. In 2 decimal points. Then finally, I do the same here. New minus old, then divide by the old. The answer you get, I multiply by 100%. So that is the effect. That is the effect. Now the assessment, you need to conclude. Conclusion. You need to conclude. Conclusion. So how are you going to conclude? You are going to say that remember this now, when you observe, this is positive percentage, this is negative percentage, this is a negative percentage. So in your conclusion, what you're going to do is to just say that PS department now, if you want to know the effect now, the effect here, it is just like, you're going to just say, the PS department proved to be the best performing department when its losses reduced by, this. You write this percentage, don't put it in when you say reduced by, don't again put negative. You say PS department proved to be best performing department when its losses reduced by this. While that of PD increased by Now this is an increase, increased by this percentage. But GM, remember GM at first proved to be the best performing. So now we are saying, but GM that appeared to be best performing moved from a profit position. This was the profit position, moved from profit position to a huge loss position. This is a loss now, to a huge loss position, which indicated that the cost allocating method was not fair. So you just need to look for your best words to describe this effect. But that's what I can say. PS department proved to be best performing department, proves to be best performing department when its loss is reduced by that percentage, while that PD increased by 51.76%. But GM that appeared to be the best performing moved from a profit position. You're moving from this to a huge loss position of this, which indicates that the cost allocating method was not fair. So, colleagues, that's all about this question. Any other question?
Yes, thank you so much.
These things, this number, this topic is a bit easier, but you see, colleagues, it requires a lot of time. And when you find that sometimes when this number appears in a paper, most people start with it. By the time you finish, a lot of time has actually gone. So, but the best way is to practice. The best way is to practice, get used. This topic is mixed. You see, like now it is mixed with ABC. Even the last number, that last number is mixed with ABC. You will analyze it very well and see. It is mixed with ABC. So you need to be aware about that. And if it comes, colleagues, please pass. Don't disappoint me. I have labored a lot. These numbers I have discussed are a lot of numbers. Almost how many questions? This was question 7. You are just left with one question, which you can try, and if you fail, please get back to me. MDC requires you to practice. A discussant may do a lot of numbers, but you are the person, if you don't get a pen, pencil, calculator, graph book, and do these things, and you time yourself, it will be hard for you to appreciate the concept. So that's all for now.